Hello traders, Nick Shaheen here, looking quickly at the stock market with a little message. Today is the 26th. Kind of a crazy day, a crazy week in the stock market because we've had red. We haven't seen red in a long time, so everybody's freaking out. We do have a legitimate reason. We have a big unknown with a virus that's going rampant, so spreading, and we don't really know much about it. It may be just a regular flu-like kill ratio. To say it crudely there, of 0.2% or whatever. The flu kills 30,000 people a year, maybe more, but the rate is 0.2, 0.3%. Debatable, depends on how you calculate. Let's say it's lower than 1%. And currently, we don't have good stats on the coronavirus, COVID-19. China says 2%. South Korea says less than 1%. If you read the stats. So we need more cases outside of China in order to really get a good read on it to see who's right, under 1 or 2 or more. So anyway, there is reason to be concerned, but we already shaved probably $2 trillion worth of market cap off the stock market. What does that mean? It means that however expensive the stock market was, it's now a lot cheaper. So is it cheap? That's in the eye of the beholder. I'm sure you can find cheap companies within, but nothing is clearly cheap. So could it go lower? Yes, it can. But these are buyable dips. It all depends on time frame and all of that. But the point of today's video is just to give a little blurb as far as overview, perspective, call it what you will. Every dip has been bought. Here are dips. They all looked like the end of the world in 2015. This is a monthly chart, by the way. So slow moving, so to speak. It's goes back to almost 2000. So it is just like zooms out and try to eliminate as much as the noise. Like this was the Christmas crash. That was fantastic. I mean, it was fantastic in like, wow, it was insane. The sentiment was so bad. This was the 08 debacle, the worst financial crisis of all time, probably, of modern times for sure. So this was not a slouch, right? And sentiment was as bad as it could be here. And then the Fed said, nope, we're on your side. And that's still the case. So the world is committed to growth. So they will throw money at it to fix it, whatever it is. Companies are still working fine. Give them time, give them resources, they'll survive this coronavirus thing. And some of them have nothing to do with the coronavirus. So keeping things into perspective. We still have full employment in the U.S., for example. So things will have to change drastically. And so this dip will be bought. Where? I don't know. We can speculate. We can drill into it. But the point of today is, what do I do about the stocks I have? So what if, I'm going to use Apple as the big guy. People are long Apple and happy because they entered wherever. I remember selling it at 15 and I thought I made a killing. 15, 1.5. That was way back in the day. So clearly I was an idiot. But so here, what can I do? If I own shares, what can I do? If my brother came to me and said, hey, I've got, this many shares of Apple, what do I do? Well, the options markets offer a lot of ways somebody can protect their shares. I know as soon as I say the options market, eyes roll. I don't understand why. I think it's a must for every person that has assets in the stock market to know how they can protect their assets. If you're driving a car, you know nothing about insurance. You still look into insurance rates and you pay premium to protect them, correct? Same concept. I own a car. I need insurance. I'm not an insurance pro. I go ask a few questions, learn a few tricks, make a few calls, buy a premium that protects my car. Same with my house, same with my health. Stocks are the same. If I have thousands, hundreds of thousands, millions of dollars into stock, why would I not look into insurance? I'm not saying protect it all the time, but when things are this shaky and the stock is this high, that's the best time to protect it. So it would have been better to protect it on this green tick than this red tick. But the concept is that the options market offers ways that I can protect my shares for a limited period of time. I don't want to protect it for the end of time. I'm okay taking some heat. Let's say somebody's okay dropping until 220 and they're still fat and happy with it. So I wouldn't protect it until there. So what do? I can do something in the options market where I go out and say, I don't have to go out. It's out there. You find the level where you want to protect it. You pick the period of time. You click, buy me this insurance. You pay the premium and you go to sleep. If it goes to zero, you're guaranteed your loss will stop at that level. So that's not free, right? Or is it? It could be free. There are tricks you can do to make it free. Let's say you don't want to buy insurance. You just want to protect it some other way and protect a little bit. So you can create your own dividends. I remember when Apple didn't pay a dividend during like years and years ago, and everybody's saying, pay a dividend already. I was like, you can create your own dividend with options. So the point is, I don't have to wait and hope that stock doesn't collapse, or if I don't want to see any losses, I can do something about it. I can go out and say, stop me out at a certain level. So again, the concept that the options offer, it's no different than insurance on a car or a house. It's a big asset. I wouldn't want to just chance it. Maybe I won't crash. First of all, it's illegal. Well, you need insurance to cover other people. That's the illegal part. So let's say I'm okay going down to 260 or wherever. I go into the options table, very easy to read once you look at it once or twice and somebody explained it, and say, okay, I want to cover it at 260 and throughout this year. So I'll go, okay, I'll buy this put out X period of time. Click buy, pay the premium, done. Whoever sold you that premium, I don't need to know who it is. They're on the hook. Let's say Apple does this, and then one day we wake up and does that. Guess where I'm out? Boom. That's it. Who's losing the money? The person that sold me that. They collected money up front. That's the risk they took. They did their homework. They said, this is the premium. I'll take it. You said, the one that bought insurance, he said, okay, that's fair premium given the size of my car and all of that. So if it goes to here, as soon as it hits here and a little bit lower because I paid a premium for it, all the losses are on them. So from here on down, the pain is theirs. Me, I'm out here. So if I entered here, this is all my profit. I don't have to lose my profit because the stock collapsed. I'm not saying it's collapsing. I'm just saying that's the concept. Okay, so this works on any stock, almost any stock. Most big stocks, actually all big stocks have options. So, and these options can occur on a weekly basis, monthly basis. I can go out the next year and buy protection. So it all depends on my personal, okay, I'm worried about this or that. I'm worried about the summer. I'm going to travel. I won't be there to watch it. I want to put, blanket insurance for that period of time. That's all fine. I want to protect it for next week. That's probably the cheapest. The longer I go out in time, the more expensive the insurance becomes, like paying premium. And you can't buy the insurance when the car is crashing. Then it becomes real expensive. Like now, the VIX, you've heard of the VIX, spiked. When the VIX spike, the premiums spike. It's like, there are fires in your city. You go to call to get fire insurance. The insurance company knows about it. They're not going to charge you the going rate normally. They're going to charge you the high premium, if at all. So you owe it to yourself, if you have a lot of money tied up in a stock, to look into how can I protect the stock. So you can get smarter and say, this is a daily chart of Apple. And you say, okay, it looks like it's going to have some support somewhere around here, 270, 271. That was a pivot. So I'm okay. I think I'll be okay, but I don't want it to go further, because if it does, that means there's all kinds of stuff that are wrong. So I want to be protected from here or here or here. Everybody has a different line. Everybody can tolerate pain differently. Somebody's entry point might be really low, so they don't care about $50. Other people, $3, and they're like, oh my gosh, get me out. So it's all different, okay? But the options world offers so many ways you can do this to protect and sleep better. If you want to learn anything about it, I'll see if I can put a link down on the description. It's worth it. I mean, you spend a few bucks to learn how to do it, and then you'll know it forever. All right, next signing out. If you have any questions, let me know.